Hey, is it about to get worse or is it about to get better? Let's jump on and take a look at the Bitcoin today. I'm your host, the Cowboy. This is Elliott Wave Cafe. Let's get started. All right, so it's been about 4 weeks since I've done a video for Bitcoin Elliott Wave analysis. I'm going to skip Ethereum today. I might do something on it in a couple of weeks. But let's just spend today by digesting what's going on inside Bitcoin's price action through the eyes of the wave principle. And I stumbled upon this chart this morning while reading the Wall Street Journal, and they had a very interesting just diagram out there, right? It says it can always get worse. And you can see in here, it tells us the change in value year to date from stocks to bonds, commodities, and other. And it's an interesting picture when you look at it, and you can see right off the bat that Bitcoin is right here at down about 60% almost year to date. So we've just finished the quarter. And, we're halfway through this year. And here we are looking at the data and the performance of all these asset classes. I will do something on the macro, possibly next weekend, where we'll take a look at, gold, Bitcoin, gold, oil, commodities, S&P 500, Nasdaq, bonds, Forex, stuff like that, where we can kind of get more of a complete picture of what's going on across the spectrum here. You can see gasoline, right, up 63%, natural gas up 45%. So everything in the energy and agriculture landscape here, it's been doing pretty well. Now, a bunch of these have already started to come down quite a bit. So natural gas and oil, corn, they've starting to hit some peaks and started to pull back. Dollar index, at least from what Wall Street Journal puts it up as, it's up about 8.7%. So very strong dollar, strong commodities in here. The inflation theme continues to dominate the markets overall. The Fed continues to increase interest rates. We're going to do another 75 basis points come in at the meeting in July. The next inflation data comes on July 13. So, we are in an environment where the risk assets suffer. And, Bitcoin, it's the one that's been hurt the most. It's been maybe a lot of leverage in here, and it's just been pretty much, coming down quite aggressively from the highs established in the spring of last year. So what else? Dow Jones in here is down 15%, S&P 500 down 20%. You look at the Nasdaq down 30%. Treasuries, they've been starting to pick up a little bit of steam in here in the last, few weeks in here, especially with the yields they're providing now, right? Towards 3.5%, they start to look attractive. So the narrative is, what's going to happen with this inflation? Will this inflation start coming down and, relax a little bit the pressure that all these risk assets feel at the moment, and maybe induce the Fed to, ease off in their super aggressive stance in increasing interest rates? Or the inflation will continue to push higher? There are some signs out there that things can start to actually, ease off a little bit on here. We've gotten some PCE data, which was, kind of stable. So a very important number coming up this month. So on the 13th of July. So we'll pay attention to that and kind of how it relates to everything else. Now, we've come to some extreme sentiment in this market. Not just Bitcoin as obviously as a risk asset, maybe one of the largest risk assets out there. So when people want to get large returns, crypto, it's one of those assets that is towards the far right of the risk curve, right? When you want it to be a little bit more safer, you're getting into treasuries and maybe into the dollar a little bit and stuff like that. When you want to put money to risk and you're confident that things are positive and you're excited about the economy, the prospects out there, you're going to buy cryptos, and that's and when it's the opposite, it's probably going to be the first one to go down, as we can see, pretty much over and over again. Consumer confidence is also at an all-time low. I mean, we haven't seen this ever since they started kind of tracking it back in the 50s. We dropped, we dropped below 50, I think, on it as well. So there's not a lot of positive sentiment out there, not a lot of excitement. People are fearful. You can hear a lot of these crypto companies getting in trouble, possibly going bankrupt, people pulling money off the exchanges, not trusting the system. But I think the trust in Bitcoin remains. I mean, it's gorgeous technology. It's got all this super strong characteristics, I think, and it's probably going through a phase, and it's kind of getting tested, but it's a lot of leverage, and a lot of the stuff it's gotten cleaned up in this latest sell-off. And, Bitcoin, I think, continues to be here and I think the network continues to get stronger. The miners are starting to, be under pressure, obviously, at these prices, and with the electricity and energy being so high, right? Like nothing seems to go right. And, I'll show you a little bit chart here in the Fear and Greed Index. It's on the S&P 500 and on on cryptos as well. There are pretty low levels. So the question is, can it get worse, or have we seen the worst of it? Well, I got enough reasons here to believe that things could start to stabilize and maybe even move on upwards from here. But let's jump on and take a look at the charts. Enough introduction in here. But I just wanted to kind of give you my view and kind of what's happening. And I think this this diagram here pretty much shows you from the assets pretty much rising in value to all the assets declining in value. I mean, look at the, it's almost like 75% and 25%, right? So there was not a lot of places to really hide since the beginning of the year. All right, let's take a look at Bitcoin charts. So on a 1 month basis, we're approaching this, I would say, pretty important trend line coming back from the middle of 2015. And it's getting tested right as we speak. We have a very important band of horizontal support in here coming back from the highs in the end of 2017, beginning of 2018 in here. And, that was a pretty large spike in Bitcoin, and it went up to almost to hit $20,000. But then it started to pull back, and it closed, both of these candles, they've closed near 13,600, so just slightly below 14K. The market just was, super aggressive here, and a lot of excitement here, characteristic of some kind of a third wave. And, we pull back and we kind of close below those levels. Now, I just put this band of support, from those highs to whatever these closing prices are, and then just kind of extend it to the right. And you can see you have a pretty interesting confluence of zones here. So you have this rising trend line, you have this horizontal support, you have some fibs, you got some equality. So the current levels are, pretty strong levels where the investors could start to get a lot of interest. Now, the scary part about this is that the price section, it's bearish. For the past 3 months, it's been nothing but, continuous sell-off that started small and then accelerating even harder to some major capitulations and major losses on the network. So a lot of people, are now underwater. You can see that, the other, 3 months there, and actually started back in November. So even before 2022 started, were also, bearish in there. So you had 3 months of bearish price action, then a couple of bullish months, and then the sell-off in here. So I'm expecting a little bit of a support. We'll see, how much stronger, they can continue to to get to the downside in here, and if they will reach the next level of support, which is towards $10,000. So if we're losing these levels, right, and if we're dropping below 16 to 15,000, I don't think we can stop until we're probably going to get into $10,000 territory. But for right now, we're not there. The bearish close, it's the monthly close is pretty bearish. There is not a lot of excitement here just yet. So we would need to see for the month of July, at least they were stabilizing somewhat, if not, creating some kind of a piercing bullish formation, or an engulfing for that matter, if anything like that, can even come to pass under current market conditions, right? I think the story, it's a little bit bigger than Bitcoin at the moment. It's across all these asset classes as I've showed you, and until we're starting to get a little bit more confidence that inflation has peaked, and the Federal Reserve can ease off a little bit on here, and earnings can start to look a little bit better, and people are excited about the future. There probably going to be a few more months until Bitcoin sell-off stabilizes and returns to more of a positive sentiment. But we are at extreme levels, and it's worth paying attention to. Here is the count. This is my white count that I've been hanging on for quite a while. I've had it this wave one in previous videos and shows. I've had it back in here, and we were looking for this to be possibly another 1-2 with the continuation higher, right? Just to kind of stay and respect the uptrend and just kind of continue to look bullish as this market was showing us in there. Then the market broke below those levels, below 30K, and it pushed lower. And I've had this wave one here for a while, through some kind of a WXY formation. And, I kind of gave up on that because I think it just doesn't have the right look. It's in my view, the sell-off from this high to this low, it's way too big and way too large to just be, Y wave of a, let's say, of a complex correction in a WXY. I mean, the proportionality and the whole look of this thing, it doesn't look like that what it wants to be. And I don't think it's some kind of a flat formation to an A, B, and then 1, 2, 3, 4, 5 for a C. I just, have a hard time getting my head wrapped around that. And I was talking to my members too when we were breaking this 30K, that if we're going to break it, it's probably going to be not something that you wanted to see. It's not going to be like a quick move down. It's probably going to start to trigger a lot of emotional responses, and it's almost like be careful what you wish for, because you want to have a correction, but the moment you break some of the key levels, this thing can continue to plunge. And you can see kind of what the sell-off in the market actually, what kind of a havoc created along in the crypto industry with all the leverage we've had, and with everybody having exposure to everybody else. And this is what happens when you get when you have Bitcoin as collateral, and Bitcoin comes down in value, so you see what happens. So that's why corrections are dangerous, because as much as you think they're healthy, they can trigger a lot of responses, and they can continue to sell off way longer and way stronger than a lot of people think. So I modified this count, and I put this wave one up here at the top, and I'm looking at this now as a 1, 2, 3, 4, 5 as a completed structure. And I'm looking now at this under my Y count as the wave one starting up here, and having this as a, it's just a very simple WXY, or a possible ABC, depending on kind of how you're these declines here are not super clear. If we're going to make one more low, you can have that as a C wave. So both of them are quite acceptable. But what's important is important that we're starting to hold these levels. We have sold off about 78.6% from the highs to the lows in here. And, these are pretty deep levels for a second wave. So we would want to see these levels hold. Now, obviously this level would not get invalidated until you get back below $3,000, but I think that would obviously be some kind of a super extreme event, and I don't see it at the moment. So let's see if we can hold in here. Again, there is a big confluence of zones, so we have some important fib support. We have the long trend line in here. We have the horizontal support. We have extremes in sentiment. So there could be a little bit of a one more low in here, maybe pushing us towards maybe, I don't know, again towards 16, maybe 15,000 at some extreme, and then we can start to push higher. But I think we're running towards the end of this initial decline in this correction, and we'll see what happens from here. So here is the next count that I have. This is my red count that looks at this as being a fourth wave, and it's a similar story. This third wave can be pushed back in here, but again, it's just a matter of proportion and the kind of this whole structure looks. And if you look, I've just measured from the top of this wave 1 to the bottom of the wave 2. I've put a blue line in here. I copy pasted this from the top of the third, and it basically gave us an exact measurement in here, which shows you how these two sell-offs here are perfectly correlated, not only in size, but also in their kind of the time decline. 100% is going to be reached here fairly soon, toward the middle of July. And, it could be one of those, important events, important timelines that could trigger a response higher here in Bitcoin. So, this would tell us that possibly this moves higher here. So a 1, 2, 3, 4, 5. You're finishing off maybe a fifth wave or maybe a larger third at a higher degree of trend. I have a couple of counts here. It doesn't really matter right now what the what the long-term count is. It's just a matter of, can we, get back up above 70K to push towards 100, 200, 300,000 in Bitcoin into this next leg higher. And these levels here, are important levels. You can see the measurements. So this is just my red count that I'm watching for a fourth wave. Again, this one can be counted as a WXY or just a simple ABC as well. The next one, it is my more bearish count, the yellow count, which it's a bit too early to kind of talk about it. I've talked about it 4 weeks ago just to kind of give you a peek at it, but this would be a completed, let's say, cycle or super cycle in Bitcoin history through a 1, 2, 3, 4, and 5. And then, if you want to move this fourth wave here, it's fine as well. You can do a 1, 2, 3, 4, 5. So either way, it's fine. But then you would expect the first type of correction that we are looking at as Elliotticians, the simplest one of them all. It's a zigzag. So every time you kind of start a correction, we're looking for that as the first sign. Obviously, it could become a flat, right? It could become a complex correction. It could be a double zigzag. It could be a double tree, whatever this wave 2 ends up being. Nobody really knows. But I'm just always starting with the simplest one of them all, which is just a simple zigzag. So that would be a wave A decline in a 1, 2, possible third wave still in progress, maybe another fourth and another fifth, and can finish Bitcoin, let's say, in this first decline towards, again, $14,000 to $15,000 up here in this area. And then that would get with the B wave rally coming up. This one would obviously have to be some kind of a corrective pattern in 3 waves or a triangle in B wave. They can take several shapes. Again, just the simplest one would be just a zigzag higher in a B, and then another crash lower in the C wave. And again, this corrective pattern in Bitcoin can take years to unfold still, just to kind of have proportion and give these waves time to unfold. So that's the bearish outlook. And even under these circumstances, the price action is showing us here that we're running towards the end of this A wave. So either a correction, like I've showed you in previous counts, or the end of this impulse, but we're in the final stages of this move, and a much larger rally here should start to take fold in crypto land overall. So going to the next slide, I have just a little bit of a look in just a smaller time frame. So that's the top of the wave 1, wave 2, then you have your ABC decline. So this is a double zigzag where you have the first wave W through an ABC. That what completes the first zigzag of the sequence. Then you have a connector wave here in a wave X, and then you sell lower again in an impulse here in a wave A. You go up in B towards 32.4, and then down in wave C at equality at about 17,900. you can see in here that the market is not really pushing higher. And what we're looking for if this pattern is completed at this level, so at 17,600, that means that the next move higher that we're looking for would be an impulsive move, which has to unfold in 5 waves. So it should be not necessarily an impulse, it could be just a simple motive wave, right? It could have a diagonal as well. So either a diagonal or an impulse as part of a wave 1. And that would start as a 1-2, maybe this sell-off that we're having right now, it's a second wave, and then you're pushing higher in a 3, 4, and 5, and then go back towards the top of this trend line. This would be the first indication. A 5-wave move of this low would be the first indication that the lows in here are important, and you could be staging the next leg higher in Bitcoin. Again, either as a B wave, right, or as the beginning of something else. So these are the internals. They look pretty good. You have 100% here, you have 100% here. You have some nice responses. If you look at the internals of these candles, you have a nice a bullish formation out of here, out of this lows. So we got the smaller time frames don't look that pretty just yet, but as long as these lows hold, I think this could be a viable interpretation. Now you can see in here that if you're counting the decline from that B wave, you can see that you can have a wave 1, a wave 2, 3. So there might be another 4th and another 5th coming. And that's the risk, that you can push lower back towards maybe, 15K or 16 or something like that, and just sharply lower one more time in a final 5th wave and then start to rally. So I'm always aware of that. So when you test the markets in here, always kind of, be prepared. And just kind of start with a small position, no financial advice, no recommendations, but this is kind of how I test the market. You start to get in and see what happens. You put your stops below these levels. If you're making a new low, then you were wrong in that first approach, but it doesn't change the thesis that you could be starting to turn from here, because that's kind of what the wave count shows you. And then, you can try again. So there's a couple of, when you try to get without a lot of confirmation, right, from picking a low, you gotta be prepared to put some blood on your hands. Other than that, otherwise you'll never be able to, to get very, very close to those lows. A lot of people just wait for more confirmations, which on the daily time frames would mean that, you're not buying it until you're actually seeing a 5-wave sequence of the lows, and that could take a couple of months before that happens. So you have to be prepared to miss that first 5-wave decline in favor of the market giving you confirmation. So that's the trade-off between, starting to, nibble as you're seeing a completion in a pattern, and giving yourself confirmation and letting the price show you that actually a low was formed. So that is the trade-off in the markets in here. And make no mistake, we're in a downtrend in here. This can continue to push lower. The moving average just shows you that that's the case. So if you want to be a little bit more comfortable with this, you would need to wait until actually the market starts to turn, before you can put some money to work in Bitcoin. So anyway, that's just the look of this 1-2 scenario. Again, I'm excited about these levels. We'll see kind of how they respond. The next one, it's that talk about this 4th wave. So not a WXY, but rather an ABC. So I just wanted to kind of show you this look as well, because you can go in this one in a 1, 2, 3, 4, and a longer 5th wave. I've had this count before, then up in B, and then you can do a 1, 2, 3, 4, and a 1, 2, 3, 4, 5. So this could still be some kind of a 5th wave forming, or this could be a wave 1 decline, a wave 2, 3, 4, and 5, and you can come back towards this, 161.8 multiple, right, of C versus A. The difference is that if you're kind of getting that deep for a C wave, this would start to smell more as a 3rd wave, not as a C wave. So that's the difference between, a much simpler ABC that kind of terminates towards 127% or equality, and one that gets a little bit longer towards 161.8. But so far, here's the good news. So far, from this highs to these lows, you do not have a 5-wave sequence. You have this sequence, you have a corrective move, and then you have another. So it's a 3-wave move. And this is encouraging for price going forward, because if that's the case, usually, these pullbacks, right, they can, if they're against the larger trend, they will take off the $70,000 level and continue to push higher. Right? The only difference is in the yellow count. If this was a fifth wave, and that's that first decline, that you can get maybe a W, you can get an X back to the B wave high, and then another decline lower. So that's how you kind of get the complex correction in Elliott wave. So this is kind of where we are on this decline. Now, here are the moving averages, and I know maybe these are boring, and they people don't like them a lot, but I think that they're very important, and because they show you what's going on in the trend, and the market was the first break in here in the 200-day moving average. It was aggressive, but anytime you kind of get this first test, the markets are not really, unless something horrible happens, the markets are not really ready to completely sell off. So after you have a big uptrend, you're getting a stabilizing market. This 200-day moving average starts to move sideways for a while before it goes lower. So that could be very well the case as we're selling off right now, right? Until this 200-day moving average starts to flatten out and stabilize and move sideways for a while, there could be some time until that happens. And things start by the price pushing back above their 20-day moving average, then the 50 stabilizes, then you go back above there, then traders and investors start to get more confidence. I think we have a low. You're above these averages, and then the narrative shifts, the news are getting better, then all of a sudden you find yourself above the 50, then you start to trend back towards the 200-day, then you climb back above that one, then confidence returns even more. And so this whole process in here can take months, might take a half a year until these moving averages converge and the price starts to overlap them and just push higher, just kind of what happened back in here, right? So we're very far. We're kind of in an extreme sell-off, because you're I think more than 50% below the 200-day moving average, which in the history of Bitcoin is quite a big drop. And the RSI is an extremely, on the weekly time frames, it's very, very low. I don't think it's ever been this low in the history of Bitcoin in terms of kind of what it is right now. So there are some big levels here in the market. It's it's seriously been its resilience is seriously being tested. So that's kind of what I would watch for. We're still in a downtrend, right, as shown by the 20-day and the 50-day, and until this changes, it's very hard to become super aggressive on Bitcoin, other than, again, just forgetting about all of this and just looking at the count structure and just betting on that. But in terms of, the other methodologies that a lot of other, hedge funds and I'd say big whales and stuff like that, right? Trend followers, those guys will continue to try to pound Bitcoin as long as the trend is down. They will continue to try to sell every time this market approaches those moving averages. So that's the fight that you have ahead of you. So looking forward to the next one in here, you have the crypto fear and greed index, and this one. Everybody's watching it that's in a crypto land, and it's hit a low of 6. I don't know if it's ever been this low. I think it's been maybe about 8 or 9 previously, but it's hit a low on June 19th. That's exactly when Bitcoin was selling off towards 17,600. And since then we started to recover. Right now we're sitting at about 14 on the fear and greed index. Bitcoin is trying to make new lows in here. You can see it. It's trying to sell off a little bit and just retest those sell-off lows. But the fear and greed index has started to push higher a little bit in here. It doesn't mean a whole lot. It's just that maybe people just kind of started to accept, right, that this is where we are, right? That could be an explanation, like, yeah, it's a crypto, it's a bear market, we're probably going to go lower, but it's not anymore such an uneasy feeling like we've had it at 30K before it actually broke lower, or it could be the fact that, maybe there's something underneath the market that people are becoming a little bit more confident that maybe lows have been found. So interesting to watch this, because definitely this was an extreme in sentiment. And I've shown, and one of the positions that I took in Bitcoin via futures was based on just a simple mathematical analysis of what happens to the price of Bitcoin looking forward 6 months, 1 year, I think up to maybe 2 years or 3 years down the road. Every time the Bitcoin Fear and Greed Index moving average drops below 15, not below 10, not below 6, not below any of these deep levels, but just below 15. And the returns were quite encouraging looking forward, like upwards of 100%. So I've taken a couple of long trades just based on that, and I'm kind of willing to test that hypothesis there, that research, and we'll see what happens. But I'm still in it. I've actually added a little bit of Bitcoin here at about 19,000, and we bought some cash at about 18,000. So I'm starting to nibble a little bit on here and see what happens a few years down the road. So the next one here is the dollar. Guys, I mean, I've talked about this about 4 weeks ago as well, and the dollar continues to be a beast. Now, all the shaded areas show you periods of dollar strength and kind of how Bitcoin reacted when we've had, the dollar being so strong. And I think this is the big elephant in the room. This is going to provide us a lot of answers. Looking at the inflation data, looking at, what the Fed does, why the dollar continues to, how much the emerging markets, suffer because of such a strong dollar. So the moment the dollar starts to relax, and it starts to push lower, which is in a weird way, I'm looking at some daily time frames, and the momentum of this advance in the dollar is starting to wane, and it's starting to look like the dollar is losing steam. And I've been talking about this one even before we've had the sell-off in here, and now we're pushing just a little bit higher once again, but it's not at the same, it's not at the same rate of change. It's much smaller, much slower, and I think the dollar is losing steam. And combining this with what's going on with the extreme sentiment in equities, and with all these commodities kind of coming back and pushing back, I think that the dollar will start to kind of lose momentum and start to push lower, and that should benefit Bitcoin overall. So, I don't know if my reading here is correct, but that's kind of what I'm seeing in this. And I've been kind of right about the natural gas, about the oil market, and about these commodities in here. So, my reading here in the dollar index is that it's probably going to come back below 100, and when it happens, it's probably going to happen pretty quickly. So let's just kind of pay attention to that. If European Central Bank are going to start to raise interest rates, I think they're looking for 25, maybe they're surprised with the 50, who knows, but there could be some catalysts coming down this month in the dollar. So that's the big elephant. If this one starts to come back down, I think the risk assets will definitely relax. So keep an eye on the dollar. I've been trying to short it. I'm going to continue to kind of try to catch a good short in the US dollar going forward. The next one here is the relationship with the copper, which, I continue to talk about it. even back in, 2020, 2021, just how important this relationship is, because, copper is a proxy for risk. It's a proxy for, economic growth and just, just positive, expectations of the economy of the future. So you can see in here, copper has been breaking this important support levels. It's trading at about 360 right now, and it's just perfectly aligned with the price of Bitcoin. So the question that I've been thinking about this morning, and just looking at the interview that I think the guy from SEC, Gary Kessler, I think, or what's his name, was talking about, is Bitcoin a commodity? And you look at all these commodities and kind of what's going on in here, and this correlation is so tight that just kind of sends me thinking that it probably is, it's just probably another commodity out there, that we're having as part of our portfolios. If you ask Michael Saylor, and, it's all these other things, right? But, it certainly acts like something that gets sold off when we have slower economic growth, and when we have, lower PMI, and, just economic numbers that are not very encouraging, and maybe the Bitcoin market has sniffed that along with the copper, way before these numbers were actually kind of coming to fruition. So will we find some lows in here in the copper? Maybe. I think this moves here are a little bit extended already. I can, at least on a shorter time frame, I can see some possible bounces happening in here. But definitely we're keeping an eye on this. I mean, was this a 1, 2, 1, 2? 3, 4, and 5, 4, and 5, so there might still be a little bit of a pain ahead. If this was an ABCX, maybe another A, B, and then down in C in copper. We'll see. I don't have a clear count on it just yet. I'm going to work on one, but it is, this correlation here matters, and it warrants to be monitored looking forward what's going on with the copper and Bitcoin overall. And then here's the relationship with the Nasdaq, and I'm going to show you the count here on the next slide because I think Nasdaq is also approaching some important levels for the downside. So there's a lot of signals in here that are starting to kind of tell us that there could be at least some kind of a relief rally coming in Bitcoin, and it could be pretty significant. So obviously these markets are highly correlated, right? Technologies and things that are, that suffer when you have an increase in the, interest rates and when the Fed, it's in a tightening cycle. So here is the count that I have in the Nasdaq. I'm just going to quickly show this to you guys because, I'm having it as an ABC for a W and then an X and then another ABC. Maybe the C wave is still a little bit in progress, but we are approaching this important trend lines coming down, from way back. And, the test of these have been met with pretty impulsive responses out of here. So this has been one of the largest correction in Nasdaq as well. I mean, I think it's even bigger than the one from 2020, maybe going back to 2008, even 2009. And this move from the highs to the lows is highly corrective. It looks like so. And I don't see in here a 5-wave impulse. I just continue to see, a series of, lower highs and lower lows in here. But it is a bunch of overlapping. So I think Bitcoin looks a little bit more impulsive than this one does. So if we're able to find some support up into these levels, and if we're able to recover in the Nasdaq, I think Bitcoin will benefit as well. So again, just we're at some important levels in the Nasdaq too. So just gotta keep that in mind. I think we're 200-week moving average in a lot of these assets. So there could be signs in here that the tide is turning, or right, it gets worse, just like I showed you in that first slide. And if it does, how does that happen? I think you still need some kind of a recovery in sentiment before you necessarily plunge lower, let's say in the next big sell-off. But remains to be seen. I mean, all we can do is just continue to pay attention to the counts, respect your methodology, watch your leverage, make sure that you respect your stops and you don't get chopped in here, and just use your methodology and just trade smart as much as possible. If you want to come and join me and see kind of how I trade, come into the pro room, visit me on there. We trade all the asset classes from cryptos to commodities and some forex and indices and you name it. I got my fingers in all these markets and I trade them pretty much all day long. I have an alert channel there where I alert my members which trades I'm taking, what levels I enter, when I exit, so you can guys follow along if you want and make your own decisions based on your own research. We have a Bitcoin channel that just does daily videos on Bitcoin, a price section from the daily to the 1 hour, and we discuss that all day. And then also a main channel where we cover the rest of the markets, right, with the S&P 500, Nasdaq, the rest of the commodities, all the other cryptos. We have an altcoin channel. So anyway, visit me on that. You can find the description in the link below. And again, as always, I appreciate you watching. We'll pick up some more videos next week, and probably an Ethereum video in maybe a couple of weeks. We'll see kind of how that works out. But thanks again for watching. If you want to subscribe and like, feel free to do it, and I'll be seeing you next time. Bye bye.